it doesn't cost the employer anything.
Correct.
It allows the employees to start saving for their retirement in case they're not doing IRAs on their own.
Right.
So it becomes easier. Can be done by payroll deduction, which a lot of times, coming around to do, at tax time to put in $7,000 or $8,000 into an IRA, most people don't have that laying around.
Right.
But so there are some advantages to it. But there's also some limits. If the business doesn't have great cash flow or great profits at this point in time, CalSavers is probably a very good option for them because they need to do something to be compliant in the state of California. But if the business is making some money and the owner would like to start saving for their retirement, because a lot of small business owners don't save for retirement, everything goes back into the business.
Company.
Yes. So they could look at doing a traditional 401k. And what are some of the advantages of a traditional 401k versus basically a Roth IRA?
Right. So employers, for a traditional 401k, for a normal defined contribution DC plan, you can make employer contributions. So you can give your employees, the participants of the plan typically, you can kind of set limits for their entry as well. There is conditions to join the plan, which is nice. For CalSavers, everyone gets in if you're 18 years old. And for a 401k plan, you can set conditions of your employment before you're able to join and defer. But you're also able, as an employer, to give an employer contribution. So a profit sharing contribution that an employee then needs to vest in, or a safe harbor contribution that automatically goes to their account and they are 100% vested in. You're able to do a lot more for the company side of things, and all of those are tax deductible for the business, that the business doesn't really get to participate in CalSavers. There are no tax deductions that they get to take. They're just facilitating a Roth IRA for their employees.
So in CalSavers, the business owner can't give the employee an extra profit sharing contribution or a match or anything like that. In a 401k they can, and for the business owner that is tax deductible.
Tax deductible, yeah.